Hi guys, it's Stock Curry, and amazingly, the stock market traded flat on Monday despite some incredible news that came out. We'll talk about what that news was, as well as the only growth stock I hold and what they just did for earnings. So let's get into it. I've got the green shirt on today, and I think the stock market really wanted to rally. There was just some economic news that definitely kept the market down today and kept it from rallying in the way that, honestly, it really wanted to. Also, just the way the market moved, I think there may have been a little bit of manipulation today, but we're not going to get into that. I don't want to speculate. Let's just talk about some of the news that came out on Monday. But first, let's go back a little bit to Saturday and talk about something that Warren Buffett said. We all know that the stock market ultimately is going to trade upon earnings. And unfortunately, the most important thing that Warren Buffett said on Saturday was not good news for the economy or for company earnings. Warren Buffett, the Oracle of Omaha, believes that the extraordinary period of excessive spending on the back of the COVID pandemic stimulus is over. And now many of his businesses are faced with an inventory buildup that they'll need to get rid of by having sales. Those sales are going to end up reducing company profits, especially from retailers such as Walmart. And that is not going to be good news for the stock market, and it's not going to be good news for the economy. And that's one of the reasons why, despite all of the bullish sentiment that's in the market right now, even the most bullish market psychology cannot overcome the fact that the fundamentals are extremely bearish. And I think that's why we've seen the stock market trade so flat for the past 2 months. Now, let's get into some of the information that came out on Monday. There was some Fed surveys that came out, and let's talk about those. The Fed survey of consumer expectations for April showed that the outlook for household spending fell by 0.5 percentage point to an annual rate of 5.2%. That is actually the lowest since September of 2021, which was near the peak of the market. Slowing consumer spending is usually the sign that consumers are running out of money. Perhaps they've now maxed out their credit cards, and this could very quickly lead to a recession. And the stock market in the morning sold off on this news, but then quickly recovered and got back to flat. Then around 2 p.m. Eastern Time, about 2 hours before the market closed, we got another Fed survey. This time it was the Senior Loan Officer Opinion Survey on bank lending practices. And this report showed that banks were worried about a slowing economy, deposit outflows, and a possible recession. The report also showed that credit was tightening quickly and the demand for commercial loans was collapsing. All of those are signs of a rapidly deteriorating U.S. economy, and the U.S. economy most likely quickly entering a recession if we're not already in one. And this initially sent the market crashing. But then very quickly, almost as quickly as it crashed, the market recovered and went back to neutral. It just seems like no matter how much bad news we get, no matter how many signs there are that we are either in or going into a recession, the stock market just doesn't care. But still, the market could not overcome all of this bad news and rally. It merely traded flat, which honestly, given the amount of bad news we got on Monday, is a pretty bullish day. Now, all of this bad news did send regional banks crashing once again, especially PacWest, that then gave up much of its earlier trading gains. Bitcoin also sold off. It was down over 5% today, especially after Binance announced that they were halting withdrawals of Bitcoin because too many people tried to withdraw their money. Binance is one of the largest exchanges in the world. If they collapse, this could mark major problems for cryptocurrencies and could send crypto back down to new 52-week lows. We'll have to keep our eyes on this one. So far, it's not looking too good for crypto. Hopefully, Bitcoin can recover from this and turn around. But if not, we could be looking at a pretty major collapse in cryptocurrencies. So, how are institutional investors responding to all of this bearish news in the economy and collapsing earnings, collapsing crypto? What are institutional investors doing about all of this? Are they buying or selling stocks? Well, they're buying. Family offices have moved to risk on with plans to load up on stocks using private credit. By the way, if you don't know what a family office is, this essentially is a very wealthy whale who has some sort of hedge fund that manages their assets for them. These are generally private accounts, but they are very large players in the stock market, very similar to any other large investment bank or hedge fund. And a lot of these will gather private funds from many wealthy individuals, pull them all together and trade together. And these are called families, and that's why these are called family offices, essentially private hedge funds. And they are planning to load up on stocks, ignoring all of the fundamentals pointing to the US entering a recession. Now, you might think that they know something you don't, and maybe you should be loading up on stocks as well. And maybe you're right. Just keep in mind that very often in times of turmoil, family offices have been known to absolutely collapse in some of the most epic ways. We saw major collapses of family offices in 2008 as well as 2020. So just be aware that just because they're very large players in the stock market does not necessarily mean that they're smarter than everybody else. Now let's talk about the only growth stock I own, and that is Palantir. Palantir just reported earnings after the close, and they beat analyst estimates for the second quarter in a row. CEO Karp also said he sees a huge opportunity in AI. Last quarter, Palantir reported their first ever profitable quarter at 1 cent per share profit. And this quarter, they followed it up with a 5 cent per share profit. Palantir rallied on the news. It was already up 4% on the day going into earnings, and then it rose another 27% after hours as of the recording of this video. Now, I will be honest with you. I did sell my Palantir after hours when it was up around $9.80 or so. I made a 32% profit on it over the past 3 months. And because last time Palantir rose up to $9 and then sold off and went back down to around $7.50, this time with Palantir rising up to around $10, I'm hoping to buy back into Palantir at around $8.50 or so. Anyway, I do plan to buy back into Palantir under $9 a share. I do think it's going to sell off over the next 3 months, just like it did last time when they had a major earnings beat. So I'm not necessarily selling it because I don't believe in this stock anymore. I'm selling it because I think I can rebuy in at a much lower price sometime in the next month or two. And I absolutely love Palantir. They are literally the only growth stock that I'm willing to invest in right now. I hate buying growth stocks when the economy is slowing down and it looks like we're about to enter a recession, because generally growth stocks get absolutely clobbered. But Palantir, I think it has enough momentum, enough of a story behind it, as well as the fact that it's growing rapidly in the middle of a slowdown in the worldwide economy. I think Palantir just has everything going for it. And that's why I love investing in the company. But I'm not a long-term buy and hold player. I honestly believe, for me personally, that I can make more money by buying back in later at a significantly reduced price. The one thing you do have to watch out for is you really have to make sure that the price will drop a lot. Because if you buy and hold long-term, when you go to sell, you're only going to pay a maybe 10% capital gains tax. But when you buy and sell short-term, then you've got to pay up to 30% or more of your actual profits every single time you sell. So you need a pretty significant drop in the share price to buy back in order to make it worth it. Otherwise, it's far better to just buy and hold. Personally, I like to be a little bit more of an active trader, but if I was a little bit more passive, I certainly would still be holding the stock. So that's what's going on with Palantir. Some of the other companies that reported earnings today didn't do so great, not quite as well. Palantir was definitely the big winner. All this week, we've got earnings coming up. Of course, we've got the CPI report on Wednesday, the PPI report on Thursday. A lot going on. If you guys missed everything that's happening this week, I'll put a link to the video I posted yesterday right up here so you guys can go watch it. In the meantime, if you got a lot out of this video, be a good friend and share this video with your friends and family. And don't forget to hit the like button and subscribe. And make sure you watch that last video I uploaded yesterday if you missed it.